Hey listeners, it's Paul Andriola here. Why not join our community at Small Cap Discoveries, where we offer our members direct access to some of the best microcap investment opportunities available. Our members are getting access to premium microcap financings, research reports, and direct access to management. Sign up today at www.smallcapdiscoveries.com.
All right, everybody, thanks for joining us today. Today we don't have Trevor, but we have myself, so I'm going to try to stumble along here as best we can on the technical side. But we're fortunate enough to have a number of individuals here today from Toronto Clean Tech, which is actually a CPC going through its major transaction right now with a company called Turkey Hill Sugarbush. We've got David Beutel here, James Sproula, and Tom Zaffis from the company. And I'm just going to sort of disclose at this point, I am a shareholder of the company. So I'm excited as much as everybody here to listen to the story here, understand what this company is all about and what the transaction is all about. So what I'm going to do today, I'm going to hand it over to James, and then James, I'll let you take it from there.
Perfect. Thanks very much, Paul. For those of you, some of you may know me, I've been on a couple of different presentations for Small Cap Discoveries. We've had a terrific working relationship. Clean Tech Capital is a corporate name that I brought forward a number of years ago with the intention of building capital pools, a series of them. The goal originally was to do 5 capital pools in 5 years. That was unrealistic. We're 8 years in and we're well into number 3. My original goal was $200,000 of my own money in each one. So invest $1 million and try and turn that into 2 or 3 million. Well, Clean Tech 1, I've got 500,000 invested. Clean Tech 2, I have 500,000 invested. And this one, Clean Tech 3, I will have 500,000 invested. So instead of $1 million into 5, I'm a 1.5 million into 3. But the results have been better than expected. Although the timetable's taken longer, the wins have been bigger than anticipated. And so this one is Clean Tech 3. The other 2 have both presented to Small Cap in the past. Number 1 is BioRem. Happy to have an offline discussion with anyone interested in that company. And the second one has had a lot more profile in the Small Cap Discoveries group because your group invested about $1 million in our last financings, and that's CHAR Technologies, YES on venture. So we've had tremendous success working with the Small Cap Discoveries group. And so on this qualifying transaction, it was my pleasure to talk to Paul and Trevor and say, we'd love to present this to your audience. I'm confident that this is going to be another winner, just like the first 2. This is a very unique situation for a capital pool where CHAR, which again, great success story, was a startup, one that didn't have revenue, that had a lot of risk, and it's worked out really well. The risk paid off. But this time, it's a capital pool merging with an operating business that has a 47-year history of profitability. Well, 44 of the 47 years profitable. So a terrific success story from the past that went through some turmoil during the pandemic. And now there's an excellent opportunity for us to take it public, and we want to share that opportunity with the group. So quick repeat, I'm $500,000 invested in this deal. My partners, the Beutel family office, are $5 million invested in this deal. And David's going to take the reins in a minute and walk you through the presentation. He's the chairman. He's been a business partner of mine. He and his brother and their family office, we've done business together since 1998. So 25 years of working together. They were shareholders and still are shareholders in CHAR. The Beutels have been shareholders in BioRem, and we've had a good working relationship, not just with the clean tech companies, but also with a number of businesses that they brought to me that I've been an investor in. So without further ado, that's the background on the clean tech capital angle. Now David's going to take the reins, share his screen, and talk about Turkey Hill and the operating business, which we're taking public through this transaction.
Thank you, James. And yes, I am just going to take a second here to share my screen. Are we, can everybody see that? Hopefully everybody sees that first page. That's great. Perfect. So as James talked about, this is a company that's been around quite a long time. It's not a startup. It's been a slow growth situation for a number of years. And the company's in the maple syrup and maple syrup products business. However, the growth really will be coming in what we call the gift souvenir market. And we'll talk about that a little bit as we go along. We, as the ownership group James alluded to bought 80% of the company from the founding family in 2017, and just recently bought out the rest of the group. And James and a few other people were part of that. And really what we target is we're not in the business of providing maple syrup and maple products to the Costco's or the Safeways of the world, because that is those bigger players who do that, and the margins are very slim, and there's no brand loyalty. It's what's the cheapest I can buy on the shelf. We deal with primarily very higher end luxury, and we'll get into who some of our businesses are, our customers are. But it's the higher margin luxury market. What we learned, as James alluded to, is during the pandemic, because we are the gift souvenir market and highly correlated with travel and tourism, is we needed to diversify in product and geography, and we did that during the pandemic. Our sales dropped significantly, but now we've come out of this a lot stronger, because now we have a much wider base of customer base and geography, including about 15% of our sales are now international, as opposed to dealing with Canadian retailers specifically. The industry, the maple syrup industry, is kind of the first step, which is only about 1.5 billion in size, and that includes those who sell to the big, the big guys, the big grocery chains. 90% of that is Canadian of the world, so there's no product that's more Canadian, quite honestly, than maple syrup. Quebec is 75% of the whole total of the 100%, not of the 90. And so that's not surprisingly, it's the home of maple syrup worldwide. Maple flavored products, so chocolate, cookies, tea, coffee, candies, you name it. Difficult to say how large the market is because it falls into confectionery and others with other companies, but it's at least 2 to 3 or more times that size. But really where we're going is, as we'll go forward, it will show you, is really the larger gift market, souvenir market, which is hundreds of billions worldwide, and we're doing that with partners. There's the few players, as I mentioned, who dominate the large chain supermarkets. We play in the premium gift market, which is actually a very fragmented market, and we are the largest in Canada in that area. And it's the ability to quickly turn and provide very unique products on your lines and formats and smaller runs. So you have to be a quick turn, which the larger guys cannot do. This is play on words, of course, but it's very apt. The demand for maple syrup and products is estimated to grow in some of these studies by more than 10% annually over the next 5 years, and it's driven really by these trends to healthier sweeteners, healthier products, getting away from processed sugar, which we all know. It's naturally organic, vegetarian, vegan, and it has a long shelf life. The syrup itself, because it is primarily sugar, it's really just sugar. And if it's bottled properly, it has over 5 years of shelf life. So it's not a perishable product, the syrup itself, properly in bottles. Some of the products, like the cookies and some of the other things, the chocolates, have a much shorter shelf life. And so we have to do things in shorter runs. Where we play, and I'll talk a little bit about the maple syrup cartel, which some of you may know about from that famous heist story of about 6 or 7 years ago. So what they do, and Tom can provide detail if I don't give enough detail. What they really do, they're the association. That's the Q is for Quebec, but it's all part of the agricultural ministry. And really, what they do is they set the price for what the per pound on an annual basis, and they provide financing for farmers. And everybody who plays in the industry for maple syrup products has to be a member of the association, because it's it's like a marketing board in any way like that. They are not a competitor. They don't provide products directly to the consumer. We work within that mindset, within that ecosystem, and we buy, as the second bullet says, we buy our syrup from brokers or graders who have originally bought from the farmers within that framework, and they do grading. And there's 4 different grades, and we only buy the grades and the quantities that we need for the markets that we sell to. And then we warehouse, bottle, sell, distribute, and we work with our major customers, which we'll get to in a slide or two, with multiple automated lines, so we can turn the switch if we need to go from as small as 40 milliliter bottles up to 4-liter bottles on the maple syrup side. And they can be the little, maple leaf bottles that you've probably seen in some of the stores. They can be, themed bottles that are very specific to the location. And we can buy product or quantity. And all the other products, cookies, chocolate, as I mentioned before, are produced offsite with partners. And they have our brand on it, but we don't make any of that in our facility. The facility itself is strictly a warehousing and a production of the maple syrup and the bottles. The brands, which are all owned, the Turkey Hill brand, which is where the TH comes from, not surprisingly, in Turkey Hill, the THS is Turkey Hill Sugarbush, as we started off. Because we are branding, we are expanding beyond the connotation of a Sugarbush. We're rebranding ourselves as the corporate as THS Maple. But the Turkey Hill brand is well known. It's been around for those 46, 47 years. And it's the recognition in the B2B channel is tremendous. And the Turkey Hill comes from the location, doesn't mean anything other than that. The other two brands, the Echo Mountain and the Herman 76, are more niche brands right now, but the Echo Mountain started as our organic line. It is now expanded to, we use it in areas where we can go into competitive markets where those who don't want us to be selling Turkey Hill to a competitor, we can actually, use the different brand in the same market. We have about 300 SKUs over all the syrup and all the other products, including, some of them that are very customized. Example is I hear there's like a CN Tower shaped bottle that we sell at not surprisingly, the CN Tower gift store. And our products are actually evenly shifted between maple syrup and all the other products, our sales. So it's growing in these areas. Cookies are a huge seller, and it used to be a little bit of I'm going to say a loss leader or a lower margin business, but thanks to Tom and crew, we've increased the margins on that business too. But you see our cookies everywhere. If you've been in an airport, you've been in fact, two of the gift stores, because you guys are Vancouver based, on Water Street down in Gastown, have, I think, the biggest display. Tom, you can correct me if I'm wrong. The biggest display of Turkey Hill product at any store in the world. It's incredible. They're big believers in our products, and they sell a lot of it. So we're happy for that. The packaging design is all ours. And what's nice about it is obviously we can use similar packaging or the same for many of our retailers. In some cases we have to customize, but it's all ours, and we leverage it across the multiple customers. So our base is large majority are Canadian based in terms of who buys the product from us in the wholesale market. But we know that the end consumer is probably a large majority not Canadian. Let's face it, if we're Canadian and you want maple syrup for your pancakes, you're going to buy it at your grocery, or you're going to buy it somewhere else. It's a lower quality. I'm telling you that right now. It's often in the non see-through glass. It's often in the opaque, either plastic or metal. But it's that's that market. We don't play in that market. We deal primarily with like the Relay stores, Virgin stores, or Hudson News now a little bit. Those are about 37% of our sales. The gift shops and specialty retailers. I was talking about the gift shops on Water Street. A high-end retailer here in Toronto that has a few stores, Boots carries our stuff. Duty free, airport and land duty free is a big part of our business as well. And then we sell with one major customer in Europe that we sell to as well. That's primarily the other. And the international sales, and this is what we did during the pandemic, is try to start that. We were at a minuscule sales offshore prior to that, is growing significantly now with partners in most of those countries, because it's hard to work obviously in especially those first 4 countries, from Canada. And you're surprised to see the US there, but there's a big part of the Midwest and the Western United States. It's not overly well serviced by the East, because there are some obviously big players in Vermont, New Hampshire, in Maine, that part of the US. We see the US growth as being a tremendous opportunity and can be high margin if done correctly. Our facility is about 50,000 square feet in Granby, Quebec, but we have options to grow right around it. There's some availability of space, which I saw with Tom a couple of months ago. And the certifications are important. The first 4 there are self-explanatory. The SQF is the food service certification that if you want to work with no matter what size, any of the grocery, supermarket, which we do a little bit smaller and regional, you have to have that food safety certification and maintain it, get tested on an annual basis. In 2019, we invested heavily in automation. Hindsight's 2020. Headed right into a pandemic right after that. But the benefit is we're in a good position to grow rapidly, which I'll show you that we are already. And we have the ability to bottle and ship 3 to 4 times the amount of syrup that we're doing today without any significant increase in the machinery and the equipment. People is always going to be the issue. Although with the automation, we need fewer people per station. So here's a very summary financial look. I've given you a whole bunch of years here because of what's gone on. So we can see the pre-pandemic, last year pre-pandemic, 2019, we were about 12.5 million of revenue, gross margin around 39-40%, and the EBITDA was about at the time was about 400,000, and that was before the automation came in. So I'll show you the impact of that as we go forward. 20 and 21, we were hit hard, as you can see. The revenue, this is per year, not a total. Per year, we went down to 3.5-4 million per year. Our margins dropped because of supply chain issues, because of you name it. All the issues there, and the lack of demand and the overhead was way too high to succeed. And the EBITDA, we were losing money in those 2 years, significantly. 2022, we see a rebound. We almost doubled sales from 2021 to 2022 as demand started to come back. Gross margins started to improve, but we were still losing money. We realized that it was very clear that about 9.5 million is our break even, and you can see that in 2023. And you can see in the bottom, I just want to point this out, when I do talk about 2023 and 2024, our year end on this transaction is changing from November 30th to June 30th. It's important because the 2023 year is the current year we're in. That's going to end November 30th of this year. The 2024 year is actually a bit of an overlap because that is pro forma, which started in July of this year. So there's July through November are overlap on this page, and you'll see the impact of the growth. So in 2023, which we're just about to finish, we'll do about, I believe, 10.5 million, in revenue, with back to the pre-pandemic margin. And the EBITDA is, a little bit better than it was back in 19 before some of the investments. 2024, which we're already 2 months into, or 2.5 now, but we have actuals for July and August. We're budgeting 14 million. And I want to highlight the fact that 5 of the months in that 2023 and 2024 are the same months, as I just said, July to November. So you can see the impact of the growth, that we're showing, about 30% growth there, right? About 32% growth between 2023 and 2024, and 5 of the months are the same. So I just wanted to highlight the fact that we're significantly ramping up. Demand is not the issue, and supply chain issues are becoming less of an issue, which is great. So you can see where it goes from there. EBITDA, 800 to 1 million. Another cliche. Obviously I'm not going to provide, I don't want to provide a forward-looking information. We're becoming a public company, and it's always dangerous. I just want to give you some metrics though, where we go and what we believe is possible, why we're so excited about the future. And that is that looking this year, I just pointed that out, that revenue expansion from 2021 to 2024, it was about 50% annually growth. We're not planning that going forward. We're not saying we're going to continue to grow at 50% top line. However, we believe that there's a lot of growth still to come, meaning that, and you feel it in Vancouver a lot, which is to say that the tourism from China, from Asia, has really not come back significantly. I'll put it that way. There's still a long way to go. And we feel it everywhere in the things that we do, whether it be, Vancouver, it would be in Niagara Falls, in, land borders across the country. They're just not back yet. And we are hopeful that they will be back soon. It's probably at about 10 to 15%, that mark. And we've already surpassed our 2000 or we will surpass our 2019, our pre-pandemic revenue number by the end of 2024. So we're forecasting more of a 15 to 20% top line growth. And then 2024, the EBITDA margin is projected at about 6 to 7%. Also because of automation, because of the scale of the top line scale, we believe that there's improvements there. So between the two, that's why we're excited. And this is organic growth. This is not, which I'll get to the next slide on, where we take this company going forward. This has nothing to do with any acquisitions that are out there. In the investments in capacity, we're looking at these 4 areas of growth. So both are, all 4 are significant. The 4th one is a little bit later on, but the first 3 we're already started on. The existing channels and customers are customers like the relay stores. They're always asking for more product, different product. And now we're able to supply that. Number 2, again, the international markets, there's a huge opportunity there, whether directly or on our own, or we're working with partners in some of these countries. So we are, excited about the international markets that are underserved. We are partnering also with complementary companies like in the high-end chocolate market, or the wine business, or other ones that serve the gift market. And we are already looking at and about to roll out some co-packing opportunities, specifically with wine companies, but also with chocolate and others, and even non-food as we go forward. That's a tremendous area of opportunity for us. And acquisitions, as I mentioned before, it's a fragmented market. Those who serve the gift market in the maple syrup and flavored business. And we've already had some discussions with parties in this industry. And we think there's an opportunity to do a bit of you can call it a roll up, but there's opportunity to be bigger and stronger through acquisitions. So any of the numbers or anything I'm talking about before are not including any acquisitions. The management team, I won't go through individually, but the guys have been, it's not a new management team. Tom Zaffis is on this call running the company. He and his group had 20, 25 plus years in the industry. We have Claude Lambert is a new CFO. As we go public, we needed that capability of having IFRS public company experience, which he has. And the board members all have lots of experience, either investing in small, and as James alluded to at the beginning, small and earlier stage companies, CPCs, and larger companies too. And also some experience directly in related industries. And James, if you want to speak a minute or two about Ian, I'll turn that over to you.
Sure, I'm happy to, because Ian is not just representative of himself, he's also a representative of the rest of the clean tech team, who, including me in the background. Ian, who will be, sort of important director, is a packaging and sort of involved in the consumer packaged goods his whole career. If you don't know the company, I promise you have their products in your house. He's the CEO of CKF Inc. They have 90% market share across Canada in the egg container business. So if you have eggs in your fridge, the box that it's in came from them. They have 5 different lines of paper plates. The highest notoriety is Royal Chinette paper plates. That's one of their lines. Foam trays that hold steaks or sausages or cheese. They have between 70% and 90% market share across all those verticals. They have 4 different plants in BC. He's in Toronto. The company originally was founded out in Atlantic Canada. So they're a national company, and he runs that business. He's not the only one of our team that has retail and CPG experience. Enzo Macri, another one of our directors, both of them were directors of Char Technologies, brought great value to Char. Enzo runs Gracious Living Corporation. They have 26,000 SKUs. His head office in Toronto is a 1 million square foot facility. There's just, between the 2 of them and the rest of our group, we know that we will bring some value to Turkey Hill in trying to expand through organic growth. So the clean tech team will bring experience and knowledge and help both building the organic side as well as a tremendous amount of experience in the acquisition side. David, back to you.
Right. Yeah, and this is the last slide, so I think we'll come in under our time allotment and then open it up for questions. Just where do we go from here, and why we're excited, and that is that we are already a significant player in this niche market, but we're evolving into a much larger player in a much larger market that we believe the gift market is as I say, hundreds of billions of dollars that we can play a little part of. We've already we will surpass we believe our previous peak in 2024 at the top line and hopefully at the bottom line as well. So the valuation, if we look at the overall valuation, we get into the details, but because we're looking at about 14 million of sales this year, this deal is being done at about 0.75 times current year sales. So we're already two months into, 2.5 months into. We can talk about the valuation after this if you like. And the growth opportunities are out there, but from acquisition and from international and from product expansion as well. And the last point I want to discuss, and James, you can as well, because I tend to not do a good job of this part, but key to it is that everybody, James talked at the beginning that ourselves, those who are in it already, have a significant amount of money, and the money that's being raised here is not coming out to go to any of the equity players. We're all keeping all our money in. In fact, we're all in, and that's what I said, we're all participating more during the qualifying transaction. So this is not a chance for getting liquidity. In fact, because we don't want it at this point, we see long-term upside. That goes for all the insiders of both companies coming together. I think that's it.
Yeah. Awesome. Well, thank you, David and James. One thing I forgot to mention is the symbol. Right now it's YAY on the Venture Exchange. I imagine you guys are probably going to end up changing the name to something that more reflects the business and probably symbol change. But do you
let me answer that right now. No, well, we've done search on a few. We actually like the YA.
Okay.
It's what's more positive?
Why not? Absolutely.
We cheer for a successful company.
Absolutely, it'll be something.
Char is YES. They kept the
exactly.
YES, so.
Exactly. Well, good. Then we don't have to worry about what it's going to be. We know what it's going to be now, so that's perfect. Maybe some details around the transaction itself. How much money are you guys raising? What's the sort of final share structure? Anything like that you can tell us?
Maybe I can start, David, and then you can jump on if you want to add to it. So as a reminder to those, I don't know how, I didn't say that much, but some of you may know about our original IPO, 10-cent IPO. We did not raise a lot of money in the IPO, although there's about 700,000 of cash in the shell today. After expenses, and we know that we'll have a little over $500,000 left. We're going to raise 4 to 4.5. The big use of proceeds is getting rid of a royalty trust, which we can talk about in detail if you people are interested. But that's going to be about 3.5. So it'll leave us $1 million of cash in the till for acquisition and growth plans. The structure is a very simple. The IPO is 10 cents. We halted the stock at 23 cents. So we had, sort of 130% lift from our IPO, which we've got a happy shell people that are, the people in our shell are, most of them are participating in the qualifying transaction. We're allowed to do a 20% discount to that. The Clean Tech board did a review and did an analysis, and we decided that would be appropriate. And so it's 18.4 cents. So it's a simple common share at 18.4 cents. My guess, and I don't know if I'd call this a forward-looking statement, but I believe we will trade between 20 and 25 cents afterwards. So I believe from the get-go, there should be a 10% lift. I hope no one invests in this for a 10% lift. My personal expectation is a 3-year 3X, and I think that's a realistic expectation for the long term. Our minimum is 10,000. We really want to spread it around. In an ideal world, we've got 100 participants for 40,000 each to raise 4 million. The minimum's 10 though, so we have some people for 100 and 150 already. The expectation is 100 participants and a total of 4 million. The people that buy $10,000 worth of stock I'm perfectly happy for them to make some of it available in the short term. But anyone buying a large quantity of stock, I would hope that they'd be in it for a year or two and give us an opportunity to demonstrate the results that we think we can. So short-term expectation, 20 to 25 cents, deals at 18.4. We will have, and important to point out, the insiders will have a 3-year escrow, but the stock will be free trading for those that participate in this round that are not insiders.
Gotcha. And what do you expect if you did the full 4.5 million? What do you expect the amount of shares outstanding is?
David, do you know the number off the top of your head?
It's 50, I think it's 58. I think it's about 58 million all in. Yeah.
Okay,
and just to clarify, or just to expand on what James was saying, after this gets done, there will only be common shares and a working capital, a working line from CIBC. So it's a very simple cap structure. The simpler the better.
Gotcha. That's perfect. Okay, that's awesome. Let's first off, I want to remind everybody, if you got a question you'd like me to ask the team here, just use the chat function, and as always, I'll ask the question on your behalf. You touched a little bit about the industry and sort of the growth rate. Maybe let's talk a little bit more about that as far as other potential products, maybe other potential markets. Just where can this really go, say, longer term?
So I can touch a little bit on it, and maybe I can open it up to Tom if he wants to. But certainly, so when we talk about other products, I sat with Tom and our head of sales in a chocolate factory, lucky me, last week, and we went through I'd say at least 10 to 12 new potential products that are confectionery, maple, and other related. So there's honestly just within the food, whether it's chocolate or popcorn or we do, as I say, tea, coffee, fudge, sugar, you name it. There's a huge opportunity for product expansion within the food side. I shall touch a little bit on the sugar side. So sugar, it's not easy to make the maple sugar. It's a little more expensive. It's more expensive for sure than white granulated sugar, which is pervasive. But it ends up looking very similar. The maple sugar is actually the same way. It's off-white-ish. It's a little different. But that we see as a huge potential growth as we go forward, because I really do believe there is a shift in more affluent countries and parts, a real shift away from the processed sugar, processed chemicalized sugar. So that we see as also a huge opportunity. But internationally, there's tremendous opportunity for growth, and it's just doing it right. Because there were, despite the fact that we've had some I guess some trade and other issues over the last X number of years with other countries around the world, Canada still has a good reputation for a lot of things, and people still want to buy Canadian, buy Canadian products.
Perfect.
If I can take a stab at just adding, sure. I think David answered the question okay, but a different angle is there are opportunities, as we mentioned in the presentation, for organic growth. There's also acquisition opportunities, not just within maple syrup, but also in that premium gift and souvenir space. And I'm quite confident. David and his team are great, but I think the Clean Tech Capital team is going to bring some value. We're going to have a strategic planning meeting as soon as we get, sort of this deal done. And I believe we can double the size of this business quite comfortably. And so there's going to be growth opportunities that will abound.
Speaking of that a little bit, is what sort of valuations, what do you see transactions going through in that kind of space, like the gift market? I mean, we're probably pretty removed from that kind of market. What does a deal look like in that space?
I think every deal is unique. Unfortunately, it's hard to say, because a lot of the gift providers, unless you're talking about the multi-line, $100 million companies, a lot of them are kind of niche, providers. So it's, and private companies. So a lot of them are hard to know. But, so it would be in my mind, a typical depending on the growth, if it's a stagnant, if it's a product that we like, or a product line that we like, that is just, it needs a bigger owner, or needs a push to take it to the next level, we would look at the private company kind of valuations, which might be somewhere, 4 or 5 times EBITDA, that kind of thing.
Yeah, it's pretty standard. Okay, good.
Yeah.
If I could add to that, the clean tech side, I mean, we're buying the whole company in the sense that we're issuing stock for it. And our analysis, we did a deep dive analysis, at 0.7 times sales, I believe we got a good deal. And don't get me wrong, I think we're bringing value to Turkey Hill. We bring more than the cash in our instrument. But I believe it's really more worth like sort of 1 times sales at this stage. So I think we got a good deal, and we got a good deal because we bring value to the Turkey Hill group. But I believe we can make other acquisitions in that same range, 4 or 5 times EBITDA or 1 time sales, and there'd be incremental value acquiring at that sort of perspective.
Gotcha. What sort of challenges do you face? What sort of keeps you up at night with this business?
I can tell you what's keeping me up at night in terms of this transaction. And believe me, I would love to have a whole bunch of the small cap discoveries people participate, but our president's list is 325 names. We want to spread it around 100 people. The administrative, burden on Dimitri, my business partner, and I has been huge. That said, we want you people, but the administrative challenge, I think it's we want to close on September the 25th. We're doing this presentation today. It's only 10 days away. I think it's very unlikely we're going to close on September the 25th because of the administrative challenge. Right. The other challenge is where David and Tom know well, we're in the midst of an audit. We need audited numbers before we can close. Right. So the things that are keeping me up at night are the administrative challenges, the audit, and the regulatory challenges. Right. But the business itself does not keep me up at night. David may have different, David probably has other things.
Well, Tom probably has that. But I would say, if you want to, the demand is there. As I said in the presentation, demand is, I'm not going to say it's insatiable, because very few things are, but the demand has come back and will continue to grow, as I mentioned, with tourism coming back and with other, the issues have been more as we come out of the pandemic, and still, I mean, cliche, and every company, every production company says it, are the supply chain issues, which have gotten a lot better. But right down to bottles or caps or things like that you can't get through into the Vancouver port, or you can't get it, you can't get it through the Panama Canal, believe it or not, because of low water levels. These are the things that I think frustrate Tom. Am I accurate with that? He's nodding his head. So it's managing that, but they're better problems to have than we were having in 2020 and 2021.
Right. So it sounds like it's just normal business challenges that everybody faces. Nothing outside of that. I mean, this might,
issues,
this might, go for it.
Important data point. This is a 47-year-old business, so it's been around a long time. It's got a nice recurring revenue, lots of customers. We think we can grow it, but worst case scenario is you got a profitable business. I mean, so so I'm not losing sleep over the day-to-day operation, which is nice, solid, got a good team in place.
Right. You got it. This might sound like a bit of an odd question, but we try to ask this more and more just to get in your heads a little bit. As the company continues to gain profitability, where do you see the low-hanging fruit as far as capital allocation? Is it more likely to be M&A? Is it more likely to be expansion of your current facilities, or something else we're missing?
Well, I'll start with that one. I would say initially it's going to be expansion of product development, and quite honestly, we have to buy syrup every year. It has a good shelf life, but you don't want to have too much. Like every business, you don't want to have too much inventory, but you don't want to have not enough. And sometimes we do get, because we don't have, nature of this business is you don't have long-term contracts with the relay, the Paradis Lagadière, which is the parent. We have long-term relationship, and they order constantly, and that's ongoing. But we also know that with a real rebound in traffic, we've seen this, Tom, right, over the last year or so. not to say we were caught with our pants down, because that would be maybe a little a little exaggeration, but as we were coming out of the pandemic, we had low inventory intentionally, because we used up a lot of it during the pandemic. We just didn't know. So we've been trying to rebuild our inventory of everything. And so I think that's where some of the working capital will go initially, product expansion. However, we have had, you asked the question, we've had some discussions with some parties, similar kinds of companies to us, who are getting to the point of they're reaching a ceiling, and they, maybe by age or maybe just by infrastructure. So we have had some of those discussions, but that may be the next phase, to be frank.
Yeah,
Paul,
go ahead, James.
That's the next question. I noticed in the chat, someone had asked, I missed the first part of the presentation, how much spend on automation, and can you expand what types of automation adaptable for other lines? Important data point that wasn't in the presentation. The company spent a lot of money on CapEx in 2019, not knowing that a pandemic was coming. And we are in a position today, when we close this transaction, that there is great opportunity to expand sales without a lot of CapEx. So we are rich in technology that was invested in 4 years ago that hasn't been fully utilized yet. David, can you give the number or amount that we spent on CapEx?
Tom may have a better grasp of that, just because I lose it in all the things that we're dealing with. Go ahead.
2018, 2019, we spent upwards of 750,000 in new equipment. Most of it's automated to remove people from the lines. Just for the labor issues we have, our only choice was, because we can't get people, we had to automate. That was our only way.
And Tom, how much of our capacity is unused? So could we double our sales based on the capacity that we have now, or?
Oh no, we could do 4 times.
4 times. Okay, that's the number that I was.
So our infrastructure for the maple syrup bottling is very, very healthy. So 4 times easily.
So you guys are clearly future proof when it comes to CapEx and automation, at least on that side. You'd mentioned maybe staffing and some other things that might restrict it a little bit, but certainly from the automation side, it sounds like you guys are.
There is one more machine that Tom keeps telling me we need. But yeah, we've done most of it. So the CapEx going forward is more maintenance CapEx than it is new equipment CapEx, at least for the short to medium term.
Yeah, I gotcha. And I guess this may lend to the next question I was going to ask is, do you see future capital requirements? Like, do you think you're going to have to raise more money at some point for any issue? I guess maybe M&A or something like that, but
yeah. It would be largely M&A. Sorry to interrupt, but it would be largely M&A, or if there was just a huge opportunity to with a new huge client. If for some reason we decided to do something like I know this is being recorded, but like a Whole Foods or something like that. You know what I mean? If there was an opportunity to do something like that, and the financials made sense, the margins made sense, we would have to increase certain things like some capacity or bottling lines and or warehousing and things like that. But that's not high on the list, to be honest with you. There's enough low-hanging fruit in what we're doing already.
Gotcha. Again, another question.
Sorry, Paul, if I could add to David's comment.
Sure.
The Cleantech Capital platform is built on partnerships and working together long-term with people. My hope is that we can make an acquisition 6 to 12 months or 18 months out. It would have to include the vendor, the company we're acquiring, being partnered with us and hanging around for a little while, or at least taking some stock.
Right.
We would raise some capital to do an acquisition, but I would be very hopeful that part of it would include a raise that includes the participants taking some of that and being our partners on a go-forward basis for some period of time.
Gotcha. Gotcha. No, fair enough. There's another question that came in, and it's around the royalty trust. Could you give us a few more details around what that was and how it came about, maybe? And
sure.
And we'll go with that.
Absolutely. Yeah. I explain it's a little complicated, but I'll try to make it as clear as possible, which is part of the reason we want to get rid of it. So what happened was, the opportunity was brought to me in 2017 by the president of a company who was starting a royalty corporation at the time. So it's a royalty in the fact that they get paid a monthly fee. It's a preferred share unit, basically, that they get paid a monthly royalty on it. It's not a brand, you know. I've been in the other side of the business where somebody owns a brand and they get a royalty fee on their brand. That's not what this is. This is purely a dividend or a monthly payment that goes based on the money that a percentage, a return on the money they put in. So the organization put in $2.75 million at the time when we acquired the company from the family, and our family group put in $3.25 million at the time, which was the amount of money to take out 80% of the company from the founding family. The royalty going up or down is based on the sales of the previous year. And what happened, and no one foresaw this, including the royalty owner, the pandemic. So what happened was it's based on a percentage of sales, and when it goes down, they had more downside protection than they had upside, which is the way they structured it. Good for them. Then they had upside potential. When the sales went from 12.5, as you saw, which is where it was kind of set, the royalty based on the amount of money originally, down to 3.5 in 2021, which was our low year, it reset at a lower number. Didn't go down by 3/4. It went down by a fraction of that, but it did go down. The issue was that on the way back up, it kind of reset at that lower number, so that then the next year, when it pretty much doubled from 21 to 22, their royalty went up by significantly more than it went down, if you follow me, in the previous years. And then again in 2023, based on the 2022 sales. So it's going, long story short, their royalty or their monthly fee, their monthly dividend is greater today based on the sales that we did last year than it was when we started. And it's only going up from there. So we've come to an agreement that there's a way to get out of it. There's a buyout, which is why in part we're doing this transaction. There has to be a change of control, and we can buy them out at a multiple of what the last 12 months royalty has been. So they're going to do well. That's James talked about at the beginning. It's about 3.6 million. They put in 2.75 6 years ago. So they're going to do well, but the company will do better with them not being in part of the organization going forward. So that makes sense. I don't know if it's a lot of detail. I can tell you that if people are interested, I can give you the formulas, but that's basically the story.
Clearly there's incentive to pay them out. It's better for the business, and it makes sense. The other question that came in is just around the financials. I know the process of taking, acquiring a company like this through a CPC. So the question is, are financials or last quarterly financial statements available? I imagine they're all on SEDAR, right?
I'll answer this, Paul. We have a portal that has got a bunch of information in it right now. There's a business plan. There's the pitch deck that David walked through. There's a little video. We are adding to that. We have not added proper financial statements, but it is our intention to add those, David, probably Monday or Tuesday, and some.
The problem is because of all the noise of the pandemic and the royalty, it needs some explanation, which is why it's so they're available. I can certainly provide them.
Okay, so what I'd like to say to the whole small caps group is, anyone that's interested, we'd be delighted to give them access to the portal. They can look at that information. I'm happy to give my personal contact information and answer questions if there's after this. And that portal is also the place to subscribe. So anyone interested in subscribing, it's all digital, it's online. You can even pay through it without a wired fee or whatever. It's automated. It's the TMX, Toronto Stock Exchange's trust company, which provides the service. We're paying for the service, obviously, but it's seamless. It's great, and it is an easy way to access information.
And do you have the link or the address?
Unfortunately, we have to add people because of the security of it. But all I have to do is ask, give us an email address, and we can send a link so that they can register.
Okay, perfect. So if anybody is interested, if you have a hard time getting hold of James, just contact myself or Trevor, and then we'll put you in contact with James and have that all taken care of. Okay, well, listen, I mean, we're getting to the end here. Just a couple questions we usually like to use to wrap it up. So obviously, a major catalyst is just the transaction coming together. That's if you got a target date for when you think it's all coming together and it'll be the stock will be trading.
The target date's September 25th, but
Okay.
given that it's today, you know, the 14th, it's 11 days away. It's very unlikely we're going to hit that target, but we're going to move forward with the expectation that we will. We're hustling. I'm putting in 13-hour days at the moment with the hope that that's going to be the case.
Right.
Might it be September 30th potentially, but if anyone's interested, we'd like to have commitments in the next week and closing before the end of the month.
Perfect. Okay, good. And then just outside of that, going, you know, sort of past that from a business standpoint, what do you think the catalysts that we should most or sort of pay the most attention to?
Yeah, for those that don't participate and that, you know, are going to watch from the sidelines and look at getting involved later, my expectation is we get this closed, whether it's the end of the month or in October, whenever it is. I believe, as I said earlier, the stock will probably trade in that 20-cent range. We have to deliver some results. We need to show the profitability. We need to make an acquisition or, you know, sort of put things in play. My estimation would be a 25 to 30 cent story in 6 to 12 months. And my personal expectation, and this is just James talking, David may have a different perspective, 3 years, 3x. That's what I think is completely realistic. The nice thing is, as I said at the very beginning in the opening, this is an operating business that's got margin, that's got EBITDA. So there's, to me, not a lot of risk. Your worst case scenario is this turns into a yield play down the road. I do think we can make it 3x, but our worst case scenario is it's not a company that's, you know, going to run out of money because it's profitable and has sales.
Perfect. And then just, I guess maybe I'll give it to David. David, just, we always like to give you guys an opportunity to give a key takeaway or key message you want everybody to walk away with today. David, what would that be?
I think James just stole the thunder, not on the, I don't like to give like where the stock price is going because you never know, as we know. But no, I think what I would focus on the fact that this is a demonstrated, you know, a company has been around a long time. We have turned the corner coming out of the pandemic. There's tremendous demand, and we strongly believe that you know, the forces are aligning. Let me put it that way. It needs a little capital, that's why we're doing this, and we have opportunity for growth in multiple directions. So we're excited about it, and we're all staying in. You know, we're all believers.
Paul, can I give one more data point? Because
Absolutely.
David and the rest of his family are terrible at talking about themselves. I've known the Beutels 25 years. I've been co-investor with them many times. Look them up. For those that don't know the name, you should know the name.
Yeah.
Equitable Bank, they're, I believe, the second largest shareholders. Accord Financial, New Grow, they were the largest shareholders back with that company. It was taken private. David's the chairman of Diamond Estates Winery. He's the chairman of Samuelson, which is a clothing business based in Quebec. Their track record's unbelievable. We've done very, very well together. I'm privileged to be able to work with the Beutel family.
Okay, stop.
But I mean that sincerely. Anyone that doesn't know their name, their father, Austin, who's now in his 90s and who still comes into the office the odd time, to me is you know, a guy I've looked up to, not just because he's tall, because all the Beutels are tall, but he really has been an accomplished guy, and that's part of the reason I'm here with them.
Yeah.
So.
No, I agree. A very well-known name in the industry, and congratulations for putting this all together. I'm happy to be able to say now that I'm going to be a maple syrup magnate by just being a shareholder here. I don't think I was ever thinking I'd be able to say that, but that's kind of fun to say.
But aren't you proud? Aren't you proud to say that?
Absolutely, I'm a Canadian. I gotta be.
Yeah, there you go.
I gotta be, right. But you know, gotta add, you know, clearly your team's put together some great deals. Char's done well. BioRem is certainly a company that keeps coming up in conversations amongst our group. So you know, hopefully same sort of success that you've seen on those two projects here. Love the story here. Love the fact that you guys are you know, real Canadian story here. I think that's fantastic. and certainly looking forward to the company coming to trade and future success there. So I want to thank everybody from the team that joined us today. James, David, and Tom, thank you so much. And we certainly look forward to catching up. And as I said, if anybody's got any questions or needs to get in contact with the company, please either contact me or Trevor, and we'll pass you along. So one last time, guys, thanks for joining us today, and looking forward to catching up soon.
Thank you, Paul.
Thanks, everybody. We appreciate it.
Yes,
Got it.
thank you.